My name is Janae Duane. I am Holy Cross's entrepreneur in residence, and I am also the managing partner of innovation at the Revolution Factory. We are very, very excited to be working with Venture Forum in bringing you tonight's programming on blockchain. When we think about not only the way that we work changing, but also the way that we live changing, you can't think of those things without thinking about distributed networks and blockchain technology, and really how that is transforming every single thing that we do in our lives. And so you guys are going to really have an enjoyable conversation, or be a part of an enjoyable conversation with Emil and Steve. So I think you guys will get a lot out of that. So now I'd like to introduce to you someone I know very well. He happens to be my business partner, and someone I have spent a tremendous amount of time with, but who also has a deep expertise in blockchain. And he is going to have, he's going to lead what we're calling a Blockchain 101 presentation to give you guys a high level, because I know that everyone's coming to it from a different place. And then you guys will jump into a fireside chat. So with that, I'd like to introduce Steve Fisher. Steve?
How many of you have heard the word blockchain, which is why you're here, right? How many consider yourselves advanced in the blockchain space? Okay. How many of you have heard of Ethereum? Okay. Bitcoin? Of course, right? Proof of work. Okay, cool. Trying to gauge. So we have some knowledge. So what I want to do is just give like the whole thing. It's about Emil. We're going to talk about a lot of different topics. So the way the evening's going to go, I'm going to take about 5 minutes, kind of give a level set. I've been in audiences where people heard the word blockchain and have no idea what it is. So it's just kind of a basics. You'll be like, yes, I know this. Thank you. I've read all the blog posts. Some people will be like, this is great. So I want to at least set the tone, the stage, because I personally think blockchain has a real marketing problem, because they hear words like ledger and they go, it's accounting. So I want to just at least kind of set the tone so everyone kind of is up to speed, and we'll get started. And then what I want to do tonight is, so Emil and I are going to talk about blockchain. We're going to cover crypto. We're going to cover investing, the things that are going on, regulation. We're going to talk about some trends. So we want to take, the time to, back and forth. We have a, mic up here to ask questions, and what we'll do is spend time on our talk and then open the floor up and kind of ask, pretty much anything you want except my private keys. You can't have them. Who knows what private keys are? Okay. All right, cool. So let's get started. So thank you for coming tonight. I don't have any 3D glasses for you, but it will be interactive. So blockchain, like I said, these are the books that everybody has been reading. I've read all of them because, I have a 1-year-old and I have no life. So I read a lot of audiobooks. The thing about blockchain, everyone talks about it as the game changer, right? The thing that's going. Now I've been building technology products for about 25 years, and for me, things come in waves. There's transformational shifts, and we had the PC era, which was about the 80s into the 90s, the internet era, which was in the early 90s, and it's still continuing. And we're about to, what I believe, shift into what's called the blockchain era. And what does that mean? Well, it means that we're going to have technology powered by blockchain. So the internet itself was designed, I don't know if you know this anecdotally, the internet was designed by DARPA in the 60s as a communications infrastructure in the event of a nuclear war. It was a fault-tolerant system. You know that, right? So it evolved when universities got commercialized, and it's decentralized, the whole goal of it. But if you think about the way the world is now, Google, Facebook, a couple of companies really kind of control the internet, right? Would you agree? Kind of the information, we're kind of like a bit at their mercy. So the whole point of blockchain is about decentralization. Many believe, including myself, that it has the ability to truly realize the internet's true purpose of decentralizing and really connecting us, but giving us the autonomy and the power that we've always wanted. So, why blockchain? Well, it allows untrusted parties to reach consensus on a shared digital history without a middleman. Yes, I can read, but the word I want to emphasize is consensus. Some of you raised your hand with consensus. Would anyone like to volunteer what they think consensus is? Crickets, okay. So consensus is everyone getting along and everyone agreeing. What does that mean in blockchain? It means everyone agreeing that this transaction and this thing is true. Even if the person you've never met in your life, they all work together to make consensus happen. So it's essentially in a database. These are databases. I mean, this is not like crazy, robots and, but it essentially is a new type of database, but it's a way that we all use this to reach a consensus. So what does it do? Well, it creates permissionless and limitless jurisdiction. It creates anonymity. It allows you to actually connect to each other in a peer-to-peer environment without actually having to know each other, without having to actually reveal yourself and be secure. So that type of thing is, for a lot of people in the privacy world, it's what they really want, what people really want. For companies and corporations who know everything about us and control the data, it scares the living hell out of them because it's radically transparent. So what that does is it gives us, this is my favorite, permissionless innovation, but it's freedom to own, freedom to transfer, and freedom to innovate. These three things are the core of what blockchain can do. So, when you think of where IT is, back in the 90s, so I remember when the internet was commercialized, thank you, President Clinton, Al Gore did not invent it. So what we looked at was this, I put an IP stack on a Windows 3.1 machine and got Mosaic running and looked at the internet for the first time and basically was able to move around. And I knew the game would change. Because before that, it was about the infrastructure of transactions, database, everything centralized. Then, during the internet, we started to actually reach out to each other, connect through publishing, commerce, and basically, Amazon. But now, this decentralization of trust, the change of intermediaries is actually making us rethink how we actually talk and work with each other. So it means that those who you can secure your identity. We could talk, money, obviously Bitcoin. That's obviously the topic on everyone's mind. Whether it's $20,000 or $200. I doubt it'll be $200 ever again. It means that borderless, think about this, right? The dollar. Now, I don't want to get into an economical debate about quantitative easing and all the things we might feel how the dollar is right now. But imagine, look, a currency is only as good as people put value on it, right? But the thing is that we transact, when you go to Europe and you get euros for dollars and you transact this, there is a known thing of when you do something. If you had $10,000 and you went to the bank tomorrow and put it in your bank account, they would go, thank you, Mr. Fisher, thank you for your $10,000. That's very much. If I went back the next day and go, I would like my $10,000, they're like, sir, I'd like you to sign 5 forms to tell me why you're taking out $10,000. With this, I can send money across borders. I can transform how actual companies and people actually transfer goods and talk to each other. I can change security, governance, law. The whole idea of how we work together as citizens and vote is up for grabs. Everything is basically up for grabs with blockchain. So there's 3 things that we're going to kind of touch on tonight is the distributed ledger. We'll talk about smart contracts. Some of you know what smart contracts are. I don't want to get too deep into it, but that's essentially how we have agreements. So you think of like a contract, right? A legal contract. I know there's an attorney or two in the audience. Please correct because I'm not an attorney. But essentially you're putting the agreement in code. Right? When you get an insurance policy, for example, you have all the legal documents, right? You agree to these things, you sign a document. Well, what if those things get lost? If I transact with you, a smart contract allows me to actually enforce those things within the code. So in the crypto token space, we've heard about cryptocurrencies, Bitcoin being probably the most popular. Ethereum runs on smart contracts. and a number of other tokens and all the type of cryptocurrencies use some various forms of that. So we'll dive into that, and I don't know what everyone's interests are in that, but if you want to talk about it, we can get into Q&A. We can dive into it. I can go deep down the rabbit hole. So as far as I can be as very Alice about this as you want, and I'm sure Emil will too. So distributed ledger, wow, worst marketing term ever. I mean, really. I have a degree in accounting, so I know how boring ledgers are. The ledger was created, so the whole type of like double entry accounting was created in Italy in the 15th century or 13th century, and it transformed accounting. Well, there's really no innovation since then. So what does it mean by distributed ledgers? It's about accounting and essentially basically recording a transaction. So I think the thing that most people get really, really confused about is they hear about distributed ledger, they hear about ledgers, they hear about blockchains. But I want to understand is that from a broader perspective, there's ledgers, things that are recorded, like accounting, like all types of money, anything that's out there. Then there's the distributed ledger, where a third party is entrusted to administer the data, everything's encrypted. Well, and then there's blockchains. So blockchains are distributed ledgers. There are other types of distributed ledger technology. There's holochain, there's hashgraph, there's the Tangle with IOTA runs on. There's a number of other things. So people kind of interchange the term. So I want to give you guys that perspective that this is, blockchain is within this space. DLT, so you hear about all kinds of technologies, but I want to give that, kind of like it encapsulates within it. So the whole thing of decentralization, and this is the real hook, is that everybody has a copy. So the way like Bitcoin or other technologies work is that when people are talking to each other and they exchange records, everyone has the same copy around the world. And that's where a number of computers reach consensus and they agree that this transaction should be recorded. It's recorded, it's encrypted, it's immutable. You can't change that. Think of what that does for like patient identity, right? Your patient records, the things that you can allow, and you can then give permissions and parts to that, but everyone holds it. It's harder to cheat. Imagine if we could apply this to voting. Just think about that, right? Real votes recorded on the blockchain. Immutable, recorded, no voter fraud, right? Harder to cheat. And there's no single point of failure. Again, the true premise of what the internet was. So it creates value in the market, lawmaking, rulemaking. It really enables so many things. And it's like, I think it's like utopian. I know it sounds like that. But what it creates is what they call the internet of value. We work right now on an internet of information and data, but we're essentially allowing assets and other types of hard goods as well as digital goods be recorded and tracked on the blockchain. And this allows us to use tokens and other types of contracts to enforce that and allow for the exchange borderlessly anywhere around the world. That's pretty awesome. So this is from Don Tapscott, who wrote The Blockchain Revolution. It's great. I think this kind of encapsulates the world because it's got energy, art, votes, assets, contracts, and Emil has worked a lot in different sectors, and we want to explore like what are those impacts, and what is that's going to do to those industries. So, with that, what's the future? I don't know, but we're going to explore it. So let's meet our guest, and let's get started. Okay, let's dive right in. Is that good? Awesome. Emil, tell us about your background. So, how long have you been involved in the space? Like, just talk about your history and how you got into doing this.
Yeah, I'm actually new to blockchain space, but prior to that, I spent quite a bit of time in venture world. Actually, my first job was in the energy supply chain. Mm-hmm. That was over 20 years ago. I was working on international project overseas, so that created a lot of interaction with vendors and so on. But eventually I'm originally from Eastern Europe, but eventually made my way to United States, went to Sloan, and that's when I made transition to venture world. and worked for companies, General Catalyst, investing in energy at Flagship Ventures. Then was part of Liberty Mutual Ventures, where we invested in insurance tech. I've seen a lot of financial services companies. And immediately prior to AVG Blockchain Fund, I was with Mass Clean Energy Center Venture Fund, investing in clean energy technologies, and made my switch to blockchain recently, a few months ago. So I'm part of the AVG Blockchain Fund. It's a new fund. We raised about $5 or $6 million. They continue to raise the fund. And we plan to make about 20 investments in our first year.
So what's the investment mix that you guys do? Like how is, because there's a lot of hedge funds, and just so you know, guys, in 2016 there were 2 funds. Last in 2017, I think they were like 200 registered funds now. But what's the mix? How do you guys approach your investing?
So it's a rough mix at this point is, let's see, we have about 10% of the fund in equities. We probably have about 50% in tokens, and the rest is we want to invest in ICOs. So tokens that are already available to public. So, but that mix might change. So
who in the audience is not familiar with the term ICO? Anybody? Okay. So you want to explain what an ICO is?
Initial coin offering, which is basically when a company will start selling their tokens in private sales through SAFTs, which is agreement for tokens. But then eventually when those tokens are available for public, or additional tokens are available to public, that event is called initial coin offering. So it's basically IPO. The way I look at it is IPO in token world.
Do you see, I personally have seen where a company will raise maybe $500,000 from angel money, but then they'll immediately go to an ICO instead of going institutional. And do you see that that's a disruptive force in the way people are raising capital? Because I know that we don't want to get into legality of how people split stuff up, but we do want to talk about regulation. We will get into that. But are you seeing that as a shift?
Actually, yeah. If I'm looking at my deal flow at this point, at everything that I see coming through my desk, probably about 80% of it is now tokens versus just regular equity raise. And the natural question is a token needed in this particular business, for this use? And many times it's not. It's just a way to quickly raise funds with at least a headache and avoid dealing with venture.
So when you guys look at something like an ICO, what are the investment criteria that you guys look at?
Well, so there are a lot of sort of overlap between sort of traditional venture and what we looking at now. So definitely we'll look at the use case. What is the company trying to solve? What's the value proposition? Is the product offering unique? How many competitors are there? Is the team strong? Do they have strong venture backing? Who is around the table as far as the board is concerned, the composition of the board. But then additional questions we would pose is blockchain really needed in this particular case? And what are the token economics? What is the transaction volumes? What's the total value of those transactions, and how many tokens are they issuing, and who's going to govern the whole process?
Yeah, so governance. Can you explain governance in a way that for us mere mortals? Because this also goes to regulation, which is really has a lot of impact on, especially in the United States. So for those of you who don't live in Malta or Zug, Switzerland, it has some real impact. So.
Yeah, I mean, I would start by saying is how tokens are, like lockup periods, how tokens are released, who controls that process, If we see, for example, that a founding team is going to get all the tokens up front while investors are still sort of waiting for their distribution, this is not a good kind of dynamic for us.
Right.
And and who's going to govern the company? Who is at the table, the backgrounds of those, governing the process? So
you spend a lot of time in different sectors like energy. What do you? Let's take. I'm going to take a couple of sectors and let's talk about how blockchain could impact that. Let's talk about energy. So you spent a lot of time in clean energy.
Yeah.
There's companies like Power Ledger that are doing solar and. But what do you think the impact of blockchain with energy? Where does it apply?
So in energy, and I'm going to set aside the cost of energy, whether it's solar or wind, but blockchain can really enable distributed generation, microgrids, where somebody who is producing solar energy can sell energy into grid, and somebody who is producing wind, basically they create their own environment and avoid really dealing with utilities. So that's one use case. Another use case would be I remember dealing with hundreds of vendors and really looking at have they delivered on their contract? Is it time for them to receive a payment? So keeping track of everything, keeping track of accounts, keeping track of codes as far as how the job is being performed, that creates a lot of accounting work.
Yeah.
That can be automated through blockchain, through smart contracts.
Hence ledgers.
Yeah.
Oh, ledgers. Oh, ledgers. So with energy, you mentioned that people be able to exchange energy. Like, how would something like it disintermediates the energy companies themselves? Because they are providing power in a way, but with like Power Ledger, you essentially are creating your own consortium of other solar owners and actually exchanging the energy and the ownership of the assets themselves. What does that do to corporations like National Grid? Not that I would be sad that they would, because I have my own feelings about National Grid, but for example, like how does that impact like power companies who really own the assets that are out there for a majority of?
It's a difficult question to answer.
Sorry. Okay. No problem.
It's a difficult question to answer, but yeah, it's.
Well, let's talk about healthcare. Have you spent much time with healthcare?
I'm not familiar with the space, but one thing, at least the way we look at it, healthcare is a tough space. It's as in any industry, it's heavily regulated, even more so. But one of the things, so we stayed away at least for some time from healthcare, because it requires sort of agreement from all the parties.
Yes.
The hospitals, there's a lot of intermediaries, and the doctors, the patients. There's too many parties with very complicated.
Yes.
Regulations.
Needs.
So it's.
Personally, from me, I spent a lot of time with healthcare on the patient space. So what I found is that the power where blockchain can be is, how many of you have multiple doctors in multiple places and you don't know where all your patient records are? Everybody? Right. Imagine, have you ever tried to change doctors and then you have to get all your records moved? And then they charge you and then you don't have everything and you're like, or you just have to restart from new. One of the powerful things with patient identity is that you can hold you are the identity. And you were talking about how do you give permission and all the different regulations. What it eventually you'll be able to do is have all of your medical data and then give permission to who wants and what doctor has access to it. And that doctor can then give access to certain, so it'll be that way, but you control that record and it's portable. And that scares the heck out of companies like Cerner, who essentially think they own your data. They think they own your record. So, what's that? Because today they do, right? There's three medical records companies that are out there. There's Cerner, Epic, and Medtronic. So they essentially, the big two, think blockchain is like they want to own the records. They might try private blockchains and do something, but eventually, and there are companies like, I want to say, I just totally blanked on their name, but they did an ICO last year, and they're creating a whole patient database. So it'll allow for you to control your identity. And identity is probably one of the biggest things within blockchain that allows you to be portable with that and all the things that you do. And that allows you to then control that access. So you worked a lot in supply chain. And you're seeing, like Walmart. What are like some, maybe one or two exciting projects you like, even if you're not investing in, like you see that's like tracking for like food, like what are the things that are really exciting to you?
Actually, the company I spoke with today, they're working with a large, I'm trying to...
Yeah, be quiet on the...
Yeah, they're very large...
Please, we'll pass that NDA, we'll pass on non-disclosures.
But basically using a third party for deliveries, and they're overspending on their shipping costs. And they have no way of tracking where it was delivered, how much was paid, and so on and so forth. So they don't have visibility into this, and they have no way of tracking. Mm-hmm. So they're using blockchain solution, the company we're looking at, to provide that visibility, and at the same time, security and traceability. So yeah. So
Cool.
that's one.
Yeah. Any other like outside of AVG, anything that you really that you like out there outside?
The other companies.
Let's develop. Yeah, some of the pilots that are emerging.
A lot of pilots are, what I've seen are, again, dealing with suppliers and vendors. I see a recurring theme over and over again.
Right.
It's the traceability of how the supply chain is moving. Can we trace? I mean, it's in pharmaceuticals, for example. There's an interesting case, or food industry for that matter.
Mm-hmm.
How ingredients are obtained, and having visibility into how they move from the producers all the way to our, to a grocery store. So that would be another exciting case.
The Walmart case. So Walmart, I believe, is Walmart and IBM are doing.
Yeah.
Their whole thing is to track food from its source to the stores. So you can hear about recalls or like,
Yep.
Oscar Mayer hot dogs are all of a sudden, toxic and you have to return them or something like that. It's just an example that popped into my head. But, that when you think about it, like where did it break down? Where did it happen? A lot of times they have no idea. It's usually somebody getting sick or something happens and they have to react or, deal with it. And then there's the legal, the contractual, the lawsuits that come from that. So how do they do that? I find that pretty neat, being able to know where everything the whole chain of, I guess you call it chain of custody. So if I speak out of turn. So you also worked in financial services, right? So obviously I think blockchain probably, that was its initial, everyone a year or two ago is fintech. Where do you see, because where it started, there's been a lot of experimentation with it. How have you seen the progression in the financial services sector, and the last couple of years, anything that has really caught your eye with regards to how blockchain has been applied?
So about 4 or 5 years ago, the company I was working with, Liberty Mutual.
Insurance company.
Insurance company. We've heard of blockchain, but as it happens in large companies, things move very slowly. So the idea of creating sort of peer-to-peer insurance company, we were looking at sort of the autonomous organization, sort of the DAOs. Yeah.
Okay.
Having blockchain do that, but one, it's very long-term project, and two, you're sort of starting a business that cannibalizes your own company.
Yeah.
When you have sort of autonomous organization that automatically makes payments, and you have your customer peer-to-peer insurance model really cannibalizes large insurance companies' sales. So that didn't go anywhere.
Peer-to-peer, meaning does somebody sell insurance to each other, or do they trade it like baseball cards, or like wait? Just kind of
Basically,
unpack that a little bit.
eliminating intermediaries.
Eliminating the
yeah.
insurance sales person.
Yes. Yeah. So, yeah.
Wow.
But now it's evolving to where at least companies considering using blockchain for their internal processes for what's called subrogation. Without getting into details, of the subrogation process, but basically it's when insurance verify each other's records and see who is at fault and basically perform the liability determination. So that requires a lot of looking into contracts, a lot of tracking what happened. Now we feel that blockchain could solve that problem.
Is this where smart contracts, for example, come into play?
That's exactly where smart contracts can come in.
If you were to explain to my mom smart contracts, how would you do it? I know I'm putting you on the spot. Anybody else?
Automated, I don't know.
Automated agreements within code?
Yes.
Built into the code? Yeah. My mom's like, what's code? I don't know, Mom. It's just stuff in the matrix. What do you think in this year so far has been some of the biggest impact to the blockchain, to the space? And, I mean, we're only 5 months in, and it's been already an interesting ride.
Regulation is a big part.
Okay. Yeah.
And so our fund has a global view, so we monitor what happens in China, South Korea, Switzerland, and of course United States. So this uncertainty of regulation, it affects not just investments, but fund operation itself. So that's a biggie.
So with regulation, does that mean, anybody can get into, ICOs or buy things online? What are some things with regulation you think are upon us right now? Like they're.
Yeah, one thing I think what will happen, there'll be a shift to sort of secured ICO. So those ICOs that are in compliance with the SEC.
Okay.
So having, accredited investors or know your customer laws. So that's a definite thing that's going to happen.
So just to poll the audience, how many of you have an account of some sort for crypto? Okay. You guys have gone through the arduous, insane process of like putting your license up and smiling in the camera, or writing a piece of paper with the date going, I'm really that dude. That's the know your customer process. That's KYC in the identity world. It's required for authentication. And it is nuts right now. And I've gone through it 8 different sites. So Binance, Coinbase, all of them to get. I mean, I did it earlier on, and it's yeah. I'm hoping that someone will figure that out. Oh wait, blockchain could actually do that. So my hope is that they would actually make it work. So kind of shifting more into the crypto side. We talked about regulation. There's also decentralization. I find it kind of hilarious that how many of you have accounts on Coinbase? Don't give me your private key. Coinbase, all right. So that's the one that everyone kind of knows, right? That's kind of the gateway fun palace. It's really expensive to buy crypto on it, so we can get into like debates on where to go, and I've learned my own lessons. But that's where people mostly start, right? They go to Coinbase, they open an account, they throw connect their bank account, or they put $100 in, and then Bank of America's like, oh, you got a crypto, you're going to cancel your account. But these accounts have these companies have allowed for us to get access to it, but one of the things that I think is hilarious is that the concept of blockchain, the concept of it is decentralization, yet we're going to centralized exchanges. We're just going to like TD Ameritrade, like eventually TD Ameritrade will let you buy Bitcoin. God forbid. But there's the whole concept of decentralized exchanges, and some of you might shake your heads like, you know what that is, and which is great. What it is people being able to distribute. So do you feel that that's the concept of decentralization and the exchange of crypto in this way is going to be something that's going to evolve this year? Do you think it's going to, you see it as something that's going to be
There's
a big
definitely
impact?
a shift into that, and we're actually looking at a couple of companies
Great.
to
Okay.
invest in. So
Yeah, like
in that space.
Yeah.
I mean, is there companies already that are ICO'd, like 0x, Kyber Networks? So
Yeah.
those two companies are very interesting. So
Yeah, they allow you to essentially create your own kind of NASDAQ and let you kind of NASDAQ each other. So you can kind of exchange and exchange this and allow you to trade each other. And the transactional volume is really low right now, but because people have to change, again, it's a change in a paradigm and the way people think. But, you know, when we talk about cryptocurrencies, there's either people take three stances, and I'm curious to get your take on this. I think people are like, I think it's kind of like gold, I think it's going to destroy the New World Order, and they get tinfoil hat on it, or they think that it's a scam. So those are kind of so I won't reveal my thoughts on it, but I mean, it has different takes. I mean, do you have an opinion on things like that are more currency based, like a Bitcoin? Do you think they're more stores of value? Do you think they're more asset? What are your thoughts on that?
I mean, at least I can speak for our fund, and also interact with other hedge funds. So Bitcoin is part of our portfolio and it's part of other funds' portfolio. So we'll look at it as a way to diversify at the fund level. So yes, it is store of value. Hard to predict, but it is store of value.
Yeah, it's a way of people exchange for the most part. Have any of you guys ever gone to a foreign country and exchanged currency, like bought currency with your dollars, right? So you go to like TravelX at the airport and they rip you off, right? And they charge exorbitant fees, and then they exchange it for a rate that's like, that's really not the exchange rate right now. I don't know where you're getting this number from. I'm sorry, sir, but if you want euros, you're going to have to pay this. So wait, if I give you $500, you're going to give me a discount on my euros? Okay, great. So it's the same thing as Bitcoin has almost become kind of like the reserve currency in a way. Because a lot of exchanges, a lot of places where people move and they want to buy ICOs, they want to buy tokens, you can't exactly do US dollars directly. So people will go to Coinbase or places and get US dollars and turn to Bitcoin and then move the Bitcoin and then buy other things with it. So it becomes this value. And I'd love to hear the audience what you guys experienced were, what you think of this. But you know, the whole point of, you know, the evolution of Bitcoin and for those of you, have you ever heard of who in the audience have heard of Mt. Gox? So about half of you. Okay. So the history, just to give you a bit of like background. So when Bitcoin was created by a mythical unicorn-like figure called Satoshi Nakamoto, who wrote a paper and talked about kind of current virtual currency, created Bitcoin. And over a number of years, it was like, you know, people mined it. It was, if you saw the Big Bang Theory, those guys mined stuff, and they lost it on a Darth Vader USB key years ago. So most of the Bitcoin is completely lost into time and space. There's about 22 million that will be created. And what happened was in about 2013, 2014, Mt. Gox was one of the places people initially bought this stuff. There wasn't a Coinbase. There wasn't places early on. Well, the guy who owned it essentially took like millions, well now it's worth like billions of dollars. And it really was also people used on the dark web to do not so legal things with Bitcoin. So it had a real bad taste and it had a really bad media impact on really just the market. So it kind of languished, it kind of stayed low, it kind of went in the background. And then as the reputation changed, more exchanges came online, people started to use it more and more, and it became really a place where people found more trust in it. And this goes back to what I mentioned before. Currency's value is only what people place in it. You know, the dollar tomorrow could go away if nobody believes it's worth anything. Same thing with Bitcoin, right? So where I'm going with this is that the shift in this and the creation of Bitcoin, people mine. They use computing technology to mine and create create Bitcoin. So one of the things that we've run into now is, well, one, you have to pay $1,000. If you like gaming, you have to pay $1,000 for a video card because everybody mines, uses it to mine stuff. We've now moved into new technologies, and there's this thing called the Lightning Network. And have you had any exposure to the Lightning Network at all on your side? Have you looked into? Okay. So Lightning Network will change the transactions and allow further and further movement for Bitcoin to actually be able to, because it can only move so fast through the internet. So what I'd like to kind of shift into is, like for you, like what are the top three cryptos? What are the things that you like? Like what are you personally are really a fan of? Like what do you really think is really a breakthrough right now? Do you even?
So definitely decentralized exchanges, as I mentioned. Companies like ZeroX, Kyber Networks.
Yeah.
There are other interesting projects, dark pools.
Dark pools? What are dark pools?
Dark pool is an exchange for larger investors in that they allow to make trades large trades without really affecting the market. Okay. So we're learning how that happens. So to us it's new, but it's exciting.
Okay. So.
And of course, there are other companies that explore completely alternative protocols. Like if you look at Bitcoin, it's slow. Everybody complains it's slow, and so even Ethereum. So companies like Hashgraph, for example, it's completely new alternative on how to process the same information. In that, trying to explain it kind of. Everything is processed basically in parallel, and every node talks to every node. So it's very hard to break through that. It's hard to attack any one node, while the transactions are happening at speeds that are hundreds of times faster. So that's one exciting project. We've also looked at companies like Algorand. Algorand is a company that it's a blockchain technology, but the consensus protocol is quite different. It's basically it picks a random subset of nodes and achieves consensus that way. By that, speeding up the consensus times. And every time the subset of node is different. So, yeah.
Okay. So we've been talking your ears off for about a half an hour now. Time has been flying. So I want to kind of wrap up with like where kind of some trends, like where do you think, quantum computing aside, where do you think, there's a gentleman named John McAfee who's very famous for many things in this space. I will not increase his notoriety, but I'm not going to get into the value of Bitcoin, but where do you think blockchain itself as a technology, and those in the audience like who are working in it, like where do you think in a couple of, like 5 years, like where do you think the industry is going to go? Like where do you think we'll be?
Definitely the cryptocurrencies are here to stay. Some industries are going to be more affected than others. I would expect that the diffusion of technology will happen in the same way as it happened in sort of B2C markets, faster than B2B, simply because if you look at it, there are many decision makers in the B2B. If you're selling a blockchain solution to IBM, you're going to encounter a committee that will form a subcommittee and so on and so forth, and 6 months later you may get a decision. So whereas in small businesses to consumer applications, you can see that, for example, in some of the technologies companies that we're looking at, digital rights management. If you have authors, musicians, writers that they're creating content over the internet and they have no way of being compensated, would love to be, a blockchain is a perfect solution to that. So that's one way. So I see that in digital rights management would be bigger impact. It will have impact in fintech, but it will be slower because the larger companies, it's just tougher to get that. In energy, it's going to be even slower, I believe.
Yeah, energy
You
is
have infrastructure assets.
despite the
so-
speed of light, or this,
Yes.
it is definitely
Yeah.
one of the slowest moving industries.
Yeah, but cryptocurrencies are here to stay because they provide value. We believe that they provide value.
Yeah.
The underlying economies, if you read the book Crypto Assets, a way to value tokens, it's basically, to simplify everything, it's the underlying value of the economy that tokens create divided by the number of tokens times whatever velocity. So that's how we think about why
We're going to get a whiteboard out in a minute, and we're just going to, sorry.
why tokens are valuable. So does that answer your question?
Yeah, no, absolutely. I personally think that in 5 years that someone will solve the marketing issue and make
Yeah.
it more accessible. I think there'll be companies that will make the use of the technology and actually push down, because right now, how many of you, when you go to a website, how do you get there, right? You go to Google. Let's admit it, right? Do you really, you know what we used to have to do? We used to type in HTTP : oh crap, the other / www. And we had to type the whole string. In 1994, there literally was a phone book you could buy at Borders that had all the internet addresses in a phone book. But eventually, the technology made, I think that's going to be the big shift. I think in order for the broader market, things like private keys, public key, all this stuff is going to just move down. And there'll always be technical people and people who will make that work. But right now, I think I think the marketing itself, I'm very interested in how it affects organizations, how people innovate, how people share intellectual property. You're talking about digital rights management. I think that there will be more organizations that will adopt it and allow each other to, how it impacts research and development. If you actually want to share intellectual property or license it from each other, the process is arduous. There's a lot of legal fees. There's a lot of lawyers. You're not going to put IP attorneys out of business, but you are going to actually make their job, I think, much easier and allow them to focus on the value versus just the documents. So I think there's an IP attorney in the audience, so I would love to hear their perspective on that. So what I want to do, I want to open up and let's ask some questions. You can get as basic or as nerdy as you want. So I want somebody to come on up and let's have some conversations.
The conversation quickly migrated from blockchain technology to coins and tokens.
Fair enough. Okay.
And that happens in the media all the time, right?
Yeah.
And are they the same? Are there applications for blockchain that don't involve coins and tokens? I think there are, but they seem to be we spent 95% of our time talking about coins and tokens. So help me understand why coins and tokens is getting 95% of the press and 95% of our time versus the raw technology. And maybe I'm wrong.
No, you're not wrong. I think, I think that blockchain as a technology, as a database, allows for certain things to happen. It's the activities and the people that are using distributed ledger technology to do certain things. We talked about supply chain, we talked about energy. There's sectors, and there are called distributed DAO. They're distributed applications, dApps, that people write, like for identity, for patient use, all the things that would run on, and they run on blockchain. There's tons of them. What happens is that you can put the application out, but as a trustless environment, the ability to verify or exchange certain sets of value usually requires some sort of object. And that's where the token comes in. And people talk about crypto because it's very, the volatility of it, it captures the news. I think for us is that I wanted, we were getting into supply chain, we talked about fintech, talked about healthcare, voting's impact. there will be applications for that, but there will be those tokens that just exchange the verification and the value because it's trustless, but then there will be those that actually have monetary value within the system. So I think that's why people get to a certain point, they talk about the application, they talk about the technology, but then the things that actually are able to make it happen, I think that's where the conversation always seems to kind of lead to a lot.
There's always tokens in there somewhere.
I think in the majority, I don't think it has to happen all the time. I think you have companies like Microsoft, and the question he asked was like, does it happen in all the places? And does when you look at Microsoft and IBM and all these companies that are doing distributed ledger technology, they have applications. There will be private blockchains and there will be public blockchains. Most of everyone talks about is public blockchains because that's how we exchange the value, we trade. But we talked about healthcare earlier, right? There's probably going to be like Cerner, they're a multi-billion-dollar company. They own patient records. My hope is that they actually get a clue, that they realize that this could make their business more efficient. Because instead of having 30 versions of John Smith, who's that one John Smith, could consolidate that technology and actually create real identity and real value in that. But they'll exchange it with each other. And they won't need the tokens or the tech because they're just doing the exchange and the recording of that ledger technology. So they won't need that. But when you get into like real distributed trustless, you're going to need something to exchange certain amounts of value to say yes, thank you, or in a way to compensate in some way. So you want to?
Nothing else.
Sorry, sorry.
That's fine.
That is a great question because I wanted to talk and we wanted to balance that, but it definitely because we bounce back and forth between things, and I think when we talk as public the audience, there's always a gravitation toward. I tried to stray away from when's Bitcoin going to be $100,000? No, I don't care. I don't want it to be $100,000. I have some that are like U.S. savings bond. They're on a little hardware key in my safe that hopefully will pay for my child's education. I'm doing a 509 plan. I'm just hedging my bets here, okay? But it has its uses, and I think you'll continue to hear that. And I think you put it perfectly. It's not going to go away, but blockchain will have its use as a database. It will have its use as a communications mechanism. It will have its way to really bring companies together. Like I said, I'm really, really excited about the ability for co-opetition for companies like Qualcomm, who are essentially houses of intellectual property, who are trying to license. They license the world. That's what because they buy IP, and there are companies that buy IP, and they're kind of like IP farms, and that. We don't get into like the details of that, but the ability for like one company to be over here doing really cool technology and to one person over here to be able to say, I'm going to let you guys license this part and we're going to come together and we're going to make a cool product. One of my favorite things, you guys have ever heard of hackathons, the term hackathon? So a lot of companies do for those of you who don't know it, hackathons are essentially like kind of Red Bull fueled 72-hour event that's in companies. They have public ones that they bring out technology like Ethereum, and they have competitions and prizes, and it's about creating new technology, new intellectual property. Companies do this because it's a way to bring engineers and designers and product people, everybody together in a communal way to really get outside the box and create something new. And what happens after that? I've been in companies where somebody wins, they win their $1,000 and maybe like a couple of shares, but the company then owns, and they go through the patent process and like, thanks, we're going to apply for a patent for that. Your name's going to be on it. And then a year or two later, they leave the company. If they stay, they get compensated for that, but then it's the company's licensed property. Wouldn't it be amazing to actually still have identity, like to know that your patent's filed, or to actually to be able to take that with that ownership with you? That is tremendously valuable. And I think distributed ledger technology doesn't need to have a token in that place. There will be many places because it's a database. And so it is a long-winded answer, but it is a way to say not just all about crypto, but it is a way. Okay? Cool. Anybody? Come on up. Come on up. We like lines. Come on up.
How's it going, guys?
Hey, man. What's your name?
My name?
Yep.
Pierce Liaska.
Cool.
Thanks for sharing your thoughts. Very insightful. Interesting to hear a couple of experts actually talk to us, and it's kind of cool to be able to ask questions as well. One of the terms that is thrown around a lot by the media and by the general public is decentralized internet, and there's actually a TV series that's got a huge part of the plot line called Silicon Valley on HBO. Focuses on that idea. I'm really
You
curious.
noticed that too? New internet? Yeah.
Exactly,
Yeah.
the new internet. So I'm curious about this big idea and if there's a path explicitly forward that either of you sees as to how we get there. And I have a follow-up question on a different topic, so I'll just put it out there before I sit down, on supercomputers and the ability through, I think it's one of the Ethereum-based tokens called Golem, where the feature of it is you buy a token or a coin and then you have access to everybody's computer to come up with ideas on supercomputers. I'm just curious on your thoughts on those two items.
I'd love to take on the first question.
Go for it.
So, probably has to do with my Eastern European background. So, so I grew up in Soviet Union, right? Had relatives arrested at 2 a.m. in the morning because, and their websites shut down by the government. So,
This is during the Soviet era, or this is during like more
shortly
modern?
After, shortly after.
So the
Yeltsins and the Putins and
Right.
there's the whole.
Please no, I don't want multiple Putins. There's one's enough. It's cool. Anyway, go ahead, man.
So Telegram is a perfect example of this. Decentralized messenger. Everybody. So I believe there's a shift towards that, and Telegram is a great sort of example of this. Russia is trying to shut it down. They can't. They've outlawed this or made it. I mean, there's a media campaign and so on and so forth. But people continue to interact, continue to send messages, files. They even use it for business as well because it's secure. So yes, I mean there's a shift towards that, and it'll continue to be so. There are other companies that are working on decentralizing internet. For example, Blockstack is a great example of this. So yes, I see a shift, and so for the at least in that part of the world, which is huge. If you look at Asia. China, Russia, and so on and so forth, there is a need for that. So that'll drive.
And so would it be actually everybody buying a token to participate in the internet? Or like how does it connect to us as the public?
So his question was, would everyone buy tokens and things?
I mean, at this point, so if we were to talk about Telegram in particular, it concerns me as because the price on the private market and the secondary private market's already doubled, if not tripled.
For the ICO for Telegram?
It's a pre-sale, yeah, before it even gets to public. So you see a lot of, I don't want to say shady, but there's a lot of secondary market developing. And I do think that $1.7 billion, it's quite a significant raise. But if it were normal, I would, I guess, participate when it goes ICO. So people would buy tokens to finance a development of this decentralized messenger, for example. That's how you would participate. There's decentralized messenger, decentralized platform for various services on the internet, digital services. Basically, it's a digital economy. So you would buy into that and finance the creation of that instead of basically buying equity.
Yeah, I actually think this year you're going to see a lot of failures in apps. I think a lot of the ICOs are going to start failing, and I think you're going to see the press get into, a feeding frenzy. So to give you some history, we were actually talking about this. So back in '99, when the internet, the first .com boom was happening, you could literally have a PowerPoint and raise
Yeah.
$5 million in a venture firm. And it got harder and harder as the year things went by. You had to have applications and prototypes. Well, people who have invested in these things know about the white paper, the mythical white papers that people put out, and they raise money literally on a document. And I don't know if you know, some of them are real scams. Like, I think one had a graphic designer who was Ryan Gosling. So they had a photo of Ryan Gosling. It's like, hey, girl, I'm going to design your app. But when you look at the shift, I think it's going to start to make companies really think how they're going to approach the market. And I think to lead to your second question about Golem. So Golem's a unique technology. Golem allows, I think it's really cool because there was an and things over time. In the 70s, people would do timeshares. They would they would get computer time on a mainframe to do stuff, right? The concept is not different or new. What's changing is that the computing power and the applications. I think what's going to happen with Golem is people are going to have to develop an ecosystem around Golem. So just because you can get supercomputing power what can you do with it? You actually need people to do things to actually apply for it. So I don't know if you guys remember, I think maybe about 10, 15 years ago. So SETI, Search for Extraterrestrial Intelligence, put out an application that you could see as a screensaver that could help you search for life, and everybody's computer hooked up as a screensaver everywhere around the world because they wanted to help find that signal. They literally leveraged everybody's in parallel computing. But somebody created an application to create that. So I think the value with something like that is that when you look at products, as a product designer, someone who's built products, you have either someone who builds a product, someone builds an ecosystem or a platform, and then there are the rarer ones are the economies. How many people have jobs because Google exists and because there are Facebook ads? That's an economy. There's a whole economy built around Facebook. God, that's hard. So I think as you look at something like Golem or other distributed literature technologies, is people will not only have to build the technology, but the applications and the ecosystems will have to evolve. So I would look for that. And once that starts to happen, you mentioned 0x, you mentioned Kyber. Once people start to build things around it, that's momentum. That's traction. That's, I hope you bought the token or coin a while ago, but that's where you want to look for that. Because people will start to stumble once they have to bring the product out and they have to meet their milestones. But once that comes out and they start building stuff around it, those are the ones that are going to be amazing.
Yeah, and blockchain is uniquely positioned, I think, for the multi-sided platforms where you have multiple participants in the ecosystem, buyers and sellers and so on and so forth. So that's definitely network effect is a huge thing, what we'll look at when we make a decision.
Yeah, good point. Great point. So, you good? Did that answer your question? Awesome, excellent. Do you have a question? I think it's on.
Hi. Okay, is this better?
Yes.
So
So what's your name?
I'm Nikki.
Nikki. Nice. Have a good evening. Good evening.
I get it. Blockchain is this revolutionary technology. But what I don't get is I'm not a finance professional or a video game person, and I'm not poking around on the dark web. So for just like an ordinary gal like myself, how is it really going to impact me? And should I be investing in cryptocurrencies?
So there's kind of a two-part question. Is it going to impact you?
Yeah.
And should you invest in something?
Yeah. Should I be worried about like having to use Bitcoin in the future? And
Yeah. First, I would disclaim this is not financial advice, and nor is this.
None of this is financial advice. If healthcare adopts the technology, then the medical bills should be lower. If insurance adopts this technology, your insurance premiums will be lower because you're not paying the overhead. Eventually, when energy adopts this technology, the energy cost should be lower. What else? Hopefully the internet faster. I don't know.
Well, I think where you would see impact as a, just not on the investment side, but just as a consumer of the world, of things in the world, I think it's your information. I think the things that will impact you is who owns you, like your information, do you own it? And where can take control of it? So I think that core, like your patient records, right? Your driver's license, that data. Like right now, Facebook, as we all know about Cambridge Analytica, there are many Cambridge Analyticas out there that they don't talk about. That was one that just got exposed in a political way. There are many companies that are doing this stuff. So you to watch out for companies that allow you to take control of your information and and control the privacy, that is huge for you as an individual, for your family, for the things that you feel are important, that you want to share. You should have that control. So I think that being aware of that and that awareness of that kind of tech is huge. When you look at, like, do you sign up for something, who's going to do what, that will have tremendous impact on our lives in the coming years. Because technologically, I mean, we're accelerating at a pace that the stuff that in the last, they talk about last 50 years is going to be in the next 10, right? It's insane. Within 5 to 7 years, of course, Google and Facebook, they're going to have, internet globally, so people will be able to hook into it. So they're going to own that connection. So I think you as a consumer should understand where the information is, what types of technologies are using this so that you can take control of you, right? Cryptocurrencies, I don't know your financial background, so for me, I enjoy it. It's a nerd thing, I enjoy it because I think it's a fascinating way to feel like I'm owning value in something. It is digital, it's completely, but it's something I can't really tell you otherwise. I can't say, go buy it, because I don't provide financial advice. But, so, sorry.
And I'd only add, if you do decide to buy cryptocurrencies, obviously reading white papers is the first step. We read white papers as a first step. We'll look at who backed the company, if there's a list of prominent investors, whether it's top venture fund or top blockchain fund. We'll look at the background of the CEO, what have they done in the past. You can do that either through white papers. Nowadays, LinkedIn is available, group chats, Telegram chats, a whole bunch of other websites. You can figure out the backgrounds of the developers and who developed the technology. Have they done something in the past, something similar in the past? So we also obviously interview the CEO, and of course not everyone will do that, but if you do just that, that would eliminate a lot of projects that are...
So let me ask you a disclaimer. I am not a financial advisor, but let me ask you a question. Do you buy stocks, individual, like Apple stocks? No. Do you buy like mutual funds? Okay. So say, for example, if you were to buy a stock like Apple, you probably would look at the news. Are they creating new products? Is the company healthy? There's fundamental types of things that you can look at. So I would advise, if you're just, this is not advisory, this is advice, but I would, if you want to at least explore it, start with the basics. Start to understand what Bitcoin is. If it is, do you have a financial advisor? Okay. Yeah. So I can't really tell you otherwise, but it suits certain people. Some people, it's a very volatile environment. Some things are even more volatile than others, and it's just about the risk that you're willing to take. I look at it as, this is money that I am not planning on buying, like banking on, it's just something you have to accept. So, but I couldn't tell you. So you're welcome, of course. And anybody else?
Hi, I'm Luis.
Louis?
Again. Okay, hi, Luis. I'm Luis.
Good evening.
This sounds very interesting and very encouraging and challenging. But on the devil's advocate side, if you will.
Oh yeah, bring it on. That's great.
I come from the identity world.
Oh, excellent.
And biometrics, I heard you said the same. And so what do you think is the consensus about privacy? The more blockchain becomes prevalent in our day-to-day lives, like you're describing, it's coming in the next 5 years.
Right.
We're going to get immersed into it, and we're going to pretty much dump all our information, sensitive information, into those blockchains, networks, environments, because we're going to trust, and the system is going to trust it. But once it gets hacked, then all our information is automatically compromised. So, and as you know, I've heard that Bitcoin has been hacked already. So I don't know if you if you can comment a little bit about that, if whether it was a true, was it a really sensitive hack or not? And
the only hacking I wanted you to be please, for me, the only hacking I know of is basically when they phish email you, they scam you, they put up a Ethereum address or an address and you send something. It's usually about the methods and the social engineering behind stealing your stuff. Or like there was one, you know who Ian Bellina is? He's an ICO guy. He's really popular in the ICO space. So you're gonna love this because this is hilarious. Well, not for him. So he's really popular in the ICO space. Really, really popular guy. He does YouTube videos. Really great guy. But he likes to show off his portfolio. And he's made a couple $1 million and he's endorsed stuff and he's done a ton of stuff in this space. Well, you're an identity person, right? Anybody protects stuff. What do? Anybody heard of two-factor authentication? Where you get you go log into Google and it's a new thing, it gives you a code. They went into Google and because he shows his stuff, they didn't show his private keys, but they showed his stuff. They figured out how to get to his Google account. They reset his password to his college account. He couldn't get to it. They got into Evernote, which he didn't, and he put all of his private keys and all of his stuff on Evernote. God's sake. He didn't two-factor authenticate it. He's doing a live YouTube, and they stole $2 million live on YouTube. So it's how does identity happen? So I think that the information we give, we're going to have more control over what we give. So I don't think that Bitcoin's been hacked. I don't know, but do you know of any?
Bitcoin has not been, I have not heard that it has been hacked. Exchanges have been hacked.
Yes, exactly.
And that's a problem. And it's an ongoing problem. It's our concern as well as a fund, and also concern for other funds. Basically, the plan at this point is to
batten down the hatches, hide away in a bunker.
Buy the cryptocurrencies, save them you just download them in your drive and save them in a vault. So, that's get off the coins off the.
And the other question is, we're relying on this private key, right?
Yes.
That we're gonna pretty much write it down and put it under the mattress, but that underlying, it's a risky proposition because that's usually the weakest link. We forget we forget stuff,
absolutely.
Right? And we lose stuff and we make mistakes. So the whole concept is somehow relying into this private key. What if we lose it? There's really no way to get it back, right? Is there? That's why
a lot of Bitcoin's been lost to,
I haven't bought any Bitcoin yet, but I'm probably going to try something. And so what would be the recommendation for saving or storing that private key number? Literally, do you write it down or?
Yeah,
I already told you what our solution, Vault.
Yeah, there's hardware keys. There's physical hardware like a Ledger Nano or a Trezor that physically moves and holds that. And they have what are called recovery words. So that's and it generates these random words, and you have to have that. So I have them in specific places, and my wife has that. They're in I have, so they can, in the event of my death, she can recover stuff. But you're right. It's like anything we own. You lose the combination to like your grandfather's safe and he's got like a million, you're going to try and you could probably physically get in there, but it's like, what if you can't, right? It's lost. It is the risk. I do think that we talked about like companies evolving with DLT, distributed ledger technology, and I think that the marketing of it, I think people will bury that stuff, make it easier to recover, because you're right. Who's going to remember a 30-character funky string, and if it gets lost, or what do you do? So I think there will be the point in which it will get easier to work with, and people will work with it. But it's always going to be, it's always going to be an issue, I think. So, yeah. Okay. Yes. Wow, we've been going for a while.
Yeah, well, this is a good part, the Q&A. Coinbase, where people go and
Yes.
open up an account. I had heard that they had been requested by the IRS and the government to
Yes.
for names, for social security numbers or identities, because
Yes.
I don't remember putting my social security number in the Coinbase facility. I just don't remember that. But the tax implications when you monetize your gains or you figure out your losses, what's the impact that we have some CPAs here? I don't know if they have any of their customers that are dealing with this, but where do you see the accountability for when Uncle Sam decides to dip into your earnings, if you will?
Any thoughts on that?
Accountability. And all I can tell, if, as you know, you will be paying capital gains every time you exchange the, one coin for another, or if you exit. That's all I can tell you at this point.
I'm finishing a course to put out on Udemy, and one of the sections I've been writing is on tax stuff. Again, not a financial advisor, not an accountant, but did way too much rabbit hole. I found the end of the internet part of this stuff. It's treated in the United States as property. Huh? It's treated like a chair. So when you exchange it, the challenge is that when you buy something that uses like the first in, first out thing, like what you bought, you may have bought it, and the problem is like you may have bought something that year and take losses, and then 2 weeks later but you have to record everything, every transaction. The thing you mentioned with Coinbase is that the IRS requested from 2014 and 2015 those who did over $25,000 in transactions. I personally think they should have given them the middle finger, because it's a private corporation. Yes, they can subpoena them, but it gives them a bad rap. I think most people are putting their money in and they're moving it to other exchanges and other places they can't trace. And that's again, we talked about identity and marketing and other applications. There's a company, and I'm trying to remember, if you want, I'll find it for you, but there's a company out there that's, they will track, it's like a couple $100 for the year. You can hook it up to all the exchanges and it'll track, and it'll make a spreadsheet for you. It'll actually do all of the accounting for you so that you can do the reporting on it. Because just like Emil said, you have to report the capital gains on it. And it's, I would consult. And is anybody a CPA out here? Because, have you done any research into this at all? Have you looked into how the tax basis is on this? Putting you on the spot. But I'd love to hear any clients you have that have done this. I would please.
No, but as a U.S. citizen, you are
who follows all the laws.
You are responsible to report any gains you have.
Absolutely.
So that is, and as you talked about, you do have to identify certain lots and identify whether it's first in, first out, and things of that nature. But it is taxable. Now, whether you report everything, that's up to you. But you're supposed to report that as a U.S. citizen.
That's right. That's right. So yeah, I think the thing is that as things get much more mature, I think Coinbase has not done the reporting because of the fact that they will get subpoenaed to pull that database and make that reporting. I think very much for the fact that these exchanges, like you guys have an account with Schwab or TD Ameritrade, right? You do your account with E-Trade, you get stuff at the end of the year, you get your statements they have to report to the SEC. We were talking about regulation. I think beyond even ICOs, I think that there will be mandated regulation that will make that. They're not doing it now because they don't have to. But I think those who operate within the United States, which is why, some exchanges, Binance is a real popular exchange. The guy literally has physically moved from like Korea to Malta. Like he literally has moved the company because it's got better advantages for it, tax havens for like but I think how they deal with it, and that's why most companies won't even deal with US dollars to Bitcoin. It's usually like you buy the Bitcoin through Gemini or Coinbase in the United States. You did give them, if you authenticated your bank account and you have bought in anyway, your KYC, know your customer process, you gave them your social security. They know who you are. So if you had to get any level of amount, they know you. But it's about when it comes back, and to your point is when it comes back in and you take the money to your bank account, you could keep it out there and trade and do things and it could continue to stay there. But when the $1,000 you put in to Gemini, all of a sudden you now have $100,000. Yeah, I can't tell you. So, but you must record it. You have to be responsible. So, great question.
Any other questions? Yeah.
Hi. So I was just curious, is there like any possibility or like any way that blockchain protocols can like work for offline transactions and support things that aren't happening on the internet?
I mean, they're private blockchains.
Yeah.
You want
So I mean, some companies are actually doing that. They're you're taking it.
IBM. IBM's a good.
Yeah. Yes. IBM. Well, Disney. I'm not revealing anything confidential.
Yeah, they got.
Yeah, I mean, a number of companies do that. So, in fact, to speed up the blockchain protocol, if I may, some of the back and forth between the nodes is taken offline, and only the settlement itself is still on blockchain. But you're right, it's only in private.
Yeah, like think of like you work in a company, right, and there's applications that sit on a private server, and you only get access to it, versus everything's like in the cloud, whatever that means. So yeah, I know what it means. But it's just more of just, I think it's hilarious, everything's in the cloud. But when you have it in the company and secured, yeah, you can exchange that. And that's why I think, to your point, it's like things will get simpler. Applications will build on top of it. It will make it a point where you just install, because it's a database, right? You put it in the company, you can work offline with it, you run applications, you have certain things you do. And yeah, it'll have its uses for absolutely. Cool.
Here you go, John.
Sure. It was a follow-up before. You made a distinction between Bitcoin being hacked and the exchange being hacked, which is true. It was the exchange.
Yeah.
But what's the difference? And is there an analogy in the real world?
Bank account being hacked. Cash stolen.
Yeah, like basically like robbing you at the ATM versus breaking into the bank.
Yeah. Well,
What's the difference? Bitcoin's blocked.
Yeah.
You want me to? It's really, so the exchanges themselves are applications, and they have firewalls and security systems in which the people have account access. The account access and the way people hack and get into something is exclusive of the actual blockchain itself. So they can get access to something where they might get somebody's account information, they might get access to certain keys, but they get it from an outside source, but they don't hack the actual database itself. They use other things to get access to it. It's...
What would be an equivalent for stock?
Boy.
Like Fidelity got hacked? I mean, I'm trying to just understand. Because the Bitcoins are gone. They're just gone.
Well, they're not necessarily, they would be transferred somewhere else to somebody else's anonymous account. I mean, I'm trying to think on the spot. No, it's a really great question, because I mean, Fidelity's not running on the blockchain technology itself, but somebody's going to break into Fidelity, they're going they're going to really get through your account information. They're going to socially engineer and go, I lost my baby. I gotta move money. Give me the password. They're gonna do all kinds of stuff to get stuff, and they're gonna socially engineer you. They're gonna be like a Nigerian prince that's gonna want your account information. I mean, there's other ways, but hacking in there is the physicality of in the digital firewalls themselves. Yeah, it's hard for me to. It's a deep thinking. Great question, but I'm trying to think of it's nothing
That's
that's
the
coming.
problem that decentralized exchanges.
Well, and that's the whole thing.
Yeah.
The decentralized makes it much more powerful because then the hacking
Then the
ability of getting into a Coinbase or going like, it makes it harder and it's much more powerful, but it definitely is, not really.
Question?
Yes, come on.
Hi.
Hello.
I'm not sure if there's
What's
an
your name?
answer to. My name's Caitlin.
Caitlin, nice to
Hi.
meet you. Thanks.
I'm not sure if there's an answer to my question either, but I'm kind of, I guess, building off the idea of simplicity that you were just talking about.
Yeah.
Like how blockchain has a marketing problem, and it just like how can
Yeah.
like what do you think this will look like if we can like make it sexier or something? Is it just like how it's going to happen organically, and as more adoption happens, it's going to be a little bit more, I guess, easy for people to wrap their minds around? What's the marketing and as the usability picks up? I know you can't really answer that, but like, do you have any thoughts on that?
I can tell you, I guess, where I think the problem started is, well, not a problem, but anytime...
It was made by engineers.
Well, exactly. I mean, that's great that they created this, engineers, and that's an issue. But I guess more marketers.
What's that?
I guess we'll need more marketers.
We need more marketers. God, do we really need more marketers? How do you make it more sexy?
Well,
yeah.
I don't. Never mind. I had a thought, but.
No, I think you're right. I think you're spot on with more marketers. I think someone's going to come up with new brand names of things that people won't even. Blockchain will be down here, and it'll be like sexy bikini, really awesome gelato. It'll just be like something.
If you look at the technology adoption curve, the early adopters, the ones that have accounts, the ones that have been at it for several years, for them it's sort of natural. We're at the time where now we're hopefully crossing the chasm part. So that's when that's an issue. But I feel like the more people use the technology and hear more and more about it, they will begin to kind of feel it at the gut level. It'll take time. It'll take time.
Yeah. Emil, Steve, thank you very much for your time coming here today and sharing your knowledge. I think that we could probably field questions for another half hour, 45 minutes, but for the sake of time, we're going to wrap this up.
I just want to say thank you guys for coming. I know it got canceled from the blizzard. Now it's 75 degrees up, but I think we had a really great conversation. I think we had a really great discussion. I think it was really cool. I hope you guys learned something, and I learned something.
I think we did. Well, so let's give these guys a hand. Thank you very much.